All right, everybody, gather round. Let's talk about money, your investments, your 401k, and why you can finally peek at your portfolio without dread. This week, we're feeling good. The market's riding high and optimism is in the air. Think of it like finding a $20 bill in your old coat. Unexpected, but oh so sweet. I'm not a financial advisor, but I am your financial cheerleader, here to break down why things are looking up. Forget the scary headlines for a moment. Right now, the data tells a story of confidence and growth. People are spending, companies are innovating, and banks are strong. It's like a recipe, a dash of low market fear, a cup of happy consumers, a heap of tech innovation, and a solid base of strong banks. Mix it all together, and you get a market with a 75 to 80% chance of rising next week. So, let's dig into what's making this cake rise. Grab your coffee, get comfy, and let's dive into the good news. The market's not just surviving, it's thriving. This is your chance to understand why the outlook is so bright. No jargon, no stress, just the facts you need. Ready? Let's see what's inside this week's market optimism. Because right now, the story is all about growth, and you deserve to know why. Let's get started. Time for a vibe check. Let's look at the numbers. The VIX, which is the market's worry meter, is currently at 18.65. That's a bit higher than before, meaning investors are expecting a little more movement, so the waters aren't quite as calm. The VIX is the worry meter. Right now, it's at 18.65. Investors are still calm, not panicking, but there's a bit more caution in the air. The Fear and Greed Index is at 63 out of 100. That's still in the greed zone, but it's a little less heated. So there's optimism, but it's not running wild. When these indicators are positive, it means big investors are confident, and that confidence spreads. Think of it like a party. If everyone's laughing, you want to join in. The Consumer Confidence Index is at 98. That's just below average, showing that everyday people feel okay about the economy and their own finances, but not overly enthusiastic. The path of least resistance for stocks is still up, but with a bit more caution. Imagine a roller coaster. If everyone's getting off smiling, you're excited to get on, even if the ride looks a little bumpier. That's the mood right now. Excitement with a touch of caution. These signals tell us the market is still set for growth. The experts aren't running for the exits. They're buckling up for more, just keeping an eye on the bumps. It's still a green light for optimism, but maybe tap the brakes just a little. So what does this mean for you? The market's mood is still contagious. When the pros are confident, it's a good sign for everyone. The party's still on. With a VIX at 18.65, a greed index at 63, and consumer confidence at 98, next week looks promising. Just keep your eyes open as you ride the wave. Let's talk about you, the real engine of the economy. When people feel good about their jobs and future, they spend. And right now, consumer confidence is up. That means more dinners out, vacations booked, and a healthy economic engine. Think of the economy as a car. Consumer spending is the gas. Right now, the tank is full. Why? The job market is solid and inflation is cooling. Your dollar goes further. That stability makes everyone breathe easier and invest more. Rising consumer confidence is a huge sign things are getting better. It's millions of people saying, I feel good about where things are headed. That's powerful for the market. Businesses big and small benefit. More spending means more growth. The wind is at our backs, and that's great news for everyone. Let's talk about the market's superstars. Tech stocks. Microsoft, Google, Nvidia, and Oracle are leading the charge, driving innovation and excitement. Microsoft's software, Google's digital services, Nvidia's AI chips, these aren't just trends, they're shaping the future. The AI boom is real, creating jobs and new tech. When these giants do well, the whole market feels it. Their success lifts everyone up, drawing in investment and optimism. It's not just tech. Banks are strong too, keeping the economy's plumbing running smoothly. Strong banks mean more lending, more growth. Tech dreams big, banks keep things stable. That's a winning combo for the market. But let's zoom in on something savvy investors are watching closely. Low PE AI stocks. PE stands for price to earnings ratio. It's a simple way to see if a stock is expensive or a bargain. A low PE means the stock price is low compared to the company's earnings, which can signal value and potential for growth. Investors love low PE stocks because they offer a chance to buy into future growth at a reasonable price. In the AI space, companies like Google, Nvidia, AMD, Qualcomm, and TSMC are catching attention for their relatively low PE ratios compared to other tech giants. These companies are innovating fast, and their lower PE ratios mean investors see both value and room to run. As AI adoption accelerates, their earnings could grow quickly, making them potential breakout stars. The excitement is real, and it's not slowing down. The foundations are solid. The future looks bright. So what should you do with all this good news? The odds are in your favor. About a 75 to 80% chance the market keeps climbing next week. Be optimistic, but be smart. Diversify. Don't put all your eggs in one basket. Spread your investments across tech, banks, and other sectors. Stay informed, but don't obsess. Check in, but don't stress out. Understand the big picture, and you'll make better decisions. You're in the driver's seat of your financial journey. Celebrate the small wins. When the market's up, enjoy it. Treat yourself, stay positive, and keep your strategy balanced. Life and the market have ups and downs. Enjoy the ride when it's good. The bull is running, and it's a great time to be in the market. Stay smart, stay diversified, and stay hopeful. Have a fantastic week.